Shares of fintech company Figure higher after reporting stronger than expected revenue. This is the company's first quarterly report since going public in September. So we are thrilled to have him on the broadcast. Figure's CEO Michael Tannenbaum. Good morning to you.
Good morning. Thank you for having me.
So this is like the first time you've ever done this.
That's right.
How are you feeling about it?
Look, I'm feeling excited about the momentum in the stock. Figure, just as a bit of an overview, we are building a blockchain-based capital market. And we started in mortgage. And what we do is we actually work with about 200 different people who use our technology to originate blockchain-based assets. And we take a ton of costs out of the system and time. So we do a mortgage in about $1,000 versus industry average of 12. And we do it in about 5 days versus industry average of 45.
Right. So give the audience a couple examples of your clients.
Sure. So we have some traditional kind of banks and credit unions. We have mortgage companies like Cross Country and Guaranteed Rate. We have fintech companies, solar companies. And I think what this shows is our ambitions are much greater than just mortgage because our technology can be used to originate these blockchain-based assets.
Well, that's what I was going to ask. So how far does this go?
So I think this is a $185 billion plus market opportunity that we're executing into. And you see not only kind of tokenized loans, but also commodities, equities, and we're also in stablecoin and we're in DeFi markets. So it's just really big opportunity.
Okay, so I'm curious, now that you're public, what's it been like being a public company? I mean, the stock has been this sort of a little bit of a roller coaster situation.
Well, I think you're seeing momentum in the stock for three reasons. One is the rare combination of growth and profitability.
Right.
So we throw traditional metrics like Rule of 40 out the window. I think number two, we're unique in that we're a profitable blockchain company that is executing into that market opportunity I told you. And then third is the fact that we're really connecting real-world use cases for blockchain. We're really one of the few people that do that, like actual loans in the market that we're tokenizing and then allowing investors to buy. That's very differentiated.
Do you think ultimately you will remain an independent company if we were talking to each other 5 years from now? Because it feels to me like some other big financial services company is just going to want to take you out if they haven't already.
Well, I think for us, because this market opportunity is so big, it's funny because when I joined the company a couple of years ago, I was like, this is just a huge opportunity, and that's just continued to bear out. And so we have a really big future and a really big market opportunity in front of us.
Who do you think is your biggest competitor?
You know, it's interesting. In some ways, in the mortgage space, which is just a part of what we do, we actually are a competitor to Fannie Mae. Okay. We are an alternative blockchain-based capital market that brings much more transparency, much more liquidity, real-time settlement, use of stablecoin to settle loans. So we're sort of an alternative there. But in general, you know, we're just executing into mostly greenfield opportunity and just lowering the cost to borrow.
How much do you care about what's going on in crypto at any given moment in terms of not just, well, stablecoins, I would think you care a lot about, frankly. But even if you're looking at an Ethereum or a Solana or, frankly, Bitcoin, we've been talking about Bitcoin all morning just because it's sitting now at $96,000. I know it's not exactly the same thing, but it rhymes to some degree.
Yeah, so we focus more on the broader market adoption of blockchain technology rather than specific crypto prices. And so just to kind of frame things, I think a year ago, if you went into a boardroom and said, I want to talk about blockchain strategy, people would be like, you know, no thanks. Whereas now, if you don't have a blockchain strategy, I think people are concerned. And so the market has really changed for blockchain, in particular the adoption of technology, and that's really our focus at Figure.
But in terms of settlement, you're using stablecoins?
Yeah. So we have a stablecoin called Yields, YLDS,
yes.
And that's kind of the oil of our capital market. And so loans are settled and serviced in Yields. And just to give you a quick example, because you've probably seen a lot of the issues that have been happening in the credit markets, and we're really an antidote to that. Because when loans are settled in stablecoin, it's like a revolving door that clicks right at the same time when loans are received and money sent out. So think of it as like programmable money. That's why people use that phrase. And it's a better way to settle and trade loans. And so, yeah, we put like a digital padlock on it.
Is ultimately everybody going to have everybody? Is there going to be just dozens and dozens of different type of stable coins? Or are there going to be one or two or three winners? We just had Jeremy Allaire, obviously, from Circle here.
So you see kind of a proliferation of stablecoins. It feels in some ways like everybody has one.
Right.
And I think for us, we have the right to win in our marketplace, right? We have these origination partners that are using our technology. And so our stablecoin is the natural choice for our own ecosystem. And one of the things we've been investing in, and one of the reasons you see momentum in the stock, is integrations with other stablecoins, like, for example, Solana and Sui.
Michael, I want to thank you.
Yeah, thanks so much for having me.
Congratulations on the quarter. Come on back.
All right, appreciate it.